Well, hello there, Maverick Traders. This is Rob Reinhold. I know you were expecting Joe Jensen. You're probably disappointed, but Joe is enjoying some vacation time off with the family, so you've got me here for the midweek. So it's nice to be here live. I always love to meet live with our traders. And you know what? For years, we made the switch over to an online prop firm really in 2007. That was really the first time you could get internet in your home. And I used to love every Sunday night we would meet live. And we would meet live Sunday night, we'd meet live on Wednesday, and I loved meeting live with our traders. However, as you get older, I don't know if you've noticed this, you young people won't know what I'm talking about, but older people, you know that the world kind of goes away from the things you like and the things you prefer. And we have gone now to a world of videos, video delivery, on demand, and live sessions have pretty much gone by the wayside. And about 3 years ago, we actually asked our traders, hey, do you want a live Sunday night session, or would you rather have a video that you can watch anytime over the weekend for the trading room? 81% of our traders said, we want a video. I am here, not here specifically, I'm here because Joe's not here, but I am going to announce this is actually going to be our last live midweek trading room. I know, it is sad. We've just looked at numbers. We now have about less than 10% of people joining us live and 90% of the people watching the video. So this is going to be the last live midweek trading room. We are talking about revamping it into something different, something a little shorter, something that can be, maybe a little bit better. But as far as right now, this is an end of an era. It's kind of sad here.
Disclaimer. This video was created for professional stock and option traders. Maverick Trading is a proprietary trading firm that employs professional traders around the world. Our traders trade firm capital and keep 70 to 80% of profits they generate. All trades and analysis in this video are for professional traders only. If you are interested in becoming a professional trader for Maverick, click the apply button in the video description. Let's break down what happened today.
Let's go ahead and take a look at the markets here. Okay, so where we are in the markets is we've got the S&P is up a little bit for the week. I had the Qs down. The Qs have had a little rally here over the last, let's call it 30 minutes or an hour. So the Qs are now actually a little bit up on the week. But for the most part, we've had a pretty boring week. Now that is not unexpected because we have the FOMC here in about 2 hours. So typically into an FOMC meeting, typically see less volume, less volatility, a little bit more compression in things. We have the FOMC. There is a huge expectation. It is a 99% chance of a 25 basis rate hike. So we're pretty much going to get that rate hike. The market doesn't really care. They really want to know about the statement. So as typically, we see a little bit of volatility on the statement that the Fed makes, and then we typically get a lot of volatility on the press conference. So let's really talk about this FOMC statement here. As you can see here, it's in about 2 hours, and we've got an expectation of 25 basis points. But this press conference, to me, this is where, if there's any fireworks today, this is where they're going to come from. And that starts at 2:30 Eastern time. So I wouldn't get all worked up over any movement we get at 2 p.m. And really, you shouldn't anyway. Your portfolio should be to the point where your back's up against the wall to where you can sit through some volatility. But if you are looking to make some new trades this today to add to all of your other trades, I think it makes sense to wait till after this press conference and really probably closer to the close of the day. I know that's what I'm doing. I'm waiting to the close of the day because today's candle is going to really change what's happening on the charts. And we're going to take a look at the charts real quick. And last thing I want to point out, two big things also this week. Tomorrow we have second quarter GDP. This is the first reading of it. We are a 2% growth economy. That's a good economy. Sorry, all you perma bears that say, hey, the sky is falling. Guess what? We had 2% growth all through 2010 through 2020. and the stock market boomed the whole time. Under both presidents, it didn't matter. 2% economy is a good economy. And then we've got the core PCE price index. This is going to be probably the biggest report of the week. Is inflation really cooling, especially in employment? Is it cooling in employment? If it is, the Fed really could be done after this one or maybe one more, but the market's already betting the Fed is done. The one last thing I did want to talk about is earnings. So we've been getting mixed earnings. It seems like every earnings report, we have a bunch of stocks that did good, a bunch of stocks that didn't do well. So over the last 24 hours, we've had Microsoft really had a good report, but the stock was perfectly priced, so we had a pullback. Google, on the other hand, is up about 6% today. So we got Microsoft down about 4%, Google up about 6%. We have stocks like Snap. They warned on their earnings. They're down about 20%. So look, we're getting a mixed bit of earnings, but mixed earnings is okay for this market. This market is okay with mixed earnings. It had a big run, and if earnings are just mixed, I think this market is likely going to hold in here. So let's take a look at all the numbers. Let's take a look at all the charts, and then we're going to jump off these slides, and we're just going to go live into the market and take a look at things. So for the day, we've got the Dow is, I want to say this could be day 13 if the Dow goes positive today, which it's not looking like at the moment, but if it does, it could be the 13th up day in a row. Big deal. The Dow Jones is a dumb index. I'll say it. It's 30 stocks. It's a price-weighted index. It's dumb. The highest price stock has like 10 times more weight than the lowest price stock. So whatever Boeing does, it's going to move the market. It's okay. I'm done complaining about that. S&P up 0.5%, and we've got the Qs. They were negative. They've come back to be slightly positive. Russell is underperforming over the whole year. It's having a little bit better week, but oil up, gold up. So again, it's everything is still slightly up, and I really just want to focus in here on the charts because let's talk about where we are. We know how the markets moves. The market moves in waves. We have runs and we have bases. We have runs and we have pullbacks. We had a run, hit up against resistance, had a pullback. As you can see, that 20-period moving average acting as a support. We had a breakout and a run. And look at this price action we're getting here. This is a base. Look, it just means that we're resting. Runs, rests. Runs, pullbacks. Runs, rests. That's all that bull markets do on the upside. It's what bear markets do on the downside. It's the sideways markets that kind of get you moving all over the place. But this is pretty easy. We are in a +3 market, but we're tired. We're tired. We're resting. We're resting before the next run comes in. Now, if we did not have a Fed meeting today, I would say that that we're likely to stay sideways here for the next week or two. And we still might do that. Most of the time, on high basis, you need this 20-day moving average to creep up and start to put some pressure on it. And that's when you usually get the breakout. The fact that we have a Fed meeting today, this candle that we're seeing here today could be wildly different by the end of the day. And based on where this candle is by the end of the day will completely change my outlook on where the market is. So right now, I'm thinking 0 for the week. If this candle turns into a big green candle, it is a breakout, it's a buy, and the race is back on and you want to get more back on the bullish side. If this turns into a big fat red candle, okay, it means that we are still basing. If it breaks down below the bottom of this base, this red candle is really nasty, then all of a sudden we're looking at a retest of the 20-day moving average. Right here, right now, I really need to see the end of today's candle to make any sort of determination. And if we don't do a breakout or a breakdown today, then I think we're sideways until the 20-period moving average catches up to it. Now, that is on the S&P. Different story here on the NASDAQ, because this candle is actually telling me that we had this pullback right to a support level, right where it should have gone. We did get our confirmation candle, but this candle is troublesome. This candle is very troublesome on the NASDAQ. I'm not as worried about the candle on the S&P, but this one is worrying. Now look, we are on a Wednesday. We have a Fed meeting today. Look, this candle is not going to look the same at the end of the day as it does today. So based on what this candle does is really going to change my thinking on the Qs. Now again, this is just the NASDAQ 100, large cap tech. If we have a green candle at the end of the day, that's a buy signal. We got our confirmation yesterday and we got a little bit of follow through today. It's telling you we are going to make a run up here to 388 and possibly break out above that. If not, we'll hit our head on it and come down and make it another run out again. So for me, today's candle is really important, and it's really important on the Qs. It is not as important on the S&P, in my opinion. It just is not. But on the Qs, it's very, very important. If this fails, if this little bounce fails, you can see that we are right at a 20-day moving average. If that 20-day moving average is pierced, it is going to be the first time in months and months it's pierced. And the next test here is probably down here on the 50. I guess we got a little bit of support here, but that's about it. That's about it. So a red candle today below the 20, that's going to tell me to really, really back off being long technology. That's going to be the signal it gives to me that, hey, you know what? Go hunt elsewhere for your bulls and maybe start taking some shorter term bears in tech. This candle, again, I'll stress this one more time, then we'll move on. The candle I get on the Qs is a big deal today. The one on the S&P, I think we're just basing. That's it. I think we're basing. And if we break out to the upside, it's a go ahead and get back in significantly long. But if this red candle breaks down on the Qs, it is the first trouble we've seen on the chart for 3 months. It's the first time that I can even come out and say, hey, there's trouble in tech. Now, look, it doesn't mean it's going to crash. It just means, look, we've run 42% this year in the Qs. Yeah, we're going to get a 10% pullback somewhere. But this is a sign that that 10% pullback may be starting. Last chart I want to take a look at is the 10-year bond. Right now, we're sitting at 387. Just 2 weeks ago, we were up at 4.1. I know these round numbers don't really matter, but they matter psychologically. Whenever this gets above 4%, people start to worry, especially start to worry about the high-tech stocks. If this Fed meeting pushes these interest rates up to the 4%, again, this could be the thing that puts some pressure on tech. And the reason that would happen was that the Fed was more hawkish than the market believes. So those are just the charts to take a look at. The broad market, basing, doing okay. I'm not worried about it at all. I think that we might even get a little bit of a pullback, not a big deal. The Qs, red candle today, closed below a 20-day moving average. First sign of technical damage for 3 months. And I think you do have to be aware of it, and you do have to say, hey, look at my tech holdings. Am I overweight too much in tech? And you need to back off that.
Many people are unfamiliar with exactly what proprietary trading is. Prop trading is when a private firm hires traders like you to trade with their capital. Those traders are paid a percentage of the profits that they generate for the firm. Profitable traders are awarded higher and higher levels of capital to trade so they can take bigger positions and make more money. We've been in business for over 25 years, and we're one of the oldest prop firms based in the USA. If you would like to look into being a trader for Maverick, look in the video description below and click on the trader position to apply.
Let's take a quick look at sectors, then we're just going to jump into some trades. Here is the week-to-date returns on the sector. Materials and energy having a great week, both gold and oil, and the commodity sector is up. So that's kind of one story today. Communication services. You can thank Google for that move. Google and Meta have been having good weeks. Outside of those two stocks, it's been mixed. But you can see everything else is kind of in the middle here, just doing a market perform. What we do see, though, is tech and healthcare underperforming. This is kind of another reason why I'm looking at this technology sector saying, hey, this is now 2 weeks in a row we've underperformed the market. Is there a rotation out of tech into other things? And I think the answer is yes, there is. We'll see what happens at the end of the day today with the candle, but I think we want to keep an eye on tech. Financials. When you back out communication services, materials, and energy as kind of the stories here, financials are doing the best outside of that group. We had some good news out of PacWest Financial. They were on the brink of insolvency. Looks like they are no longer on the brink of insolvency. They're just hurting. But again, better than expected is okay. There is really nothing to update on our weekly outlook. This is where we were. We are at a +3 for our monthly outlook, meaning where we think the market's going to be in a month from now is we think it's going to be higher and significantly higher. Where do we think the market's going to be by the end of the week? We had a +1, meaning, hey, we think it's going to be slightly higher. There's nothing in the charts that is showing us to change that. That being said, we are a Wednesday out with the Fed meeting. That candle could change, which I've already gone through what that's going to mean for the market. All right, before I jump in and ask you guys for your trades and to take a look at things, I just wanted to kind of update some of the trades we've been looking at, we've been making in the trading room. On the bullish side, and again, I wanted you to take a look at our distribution here. Our distribution, we've backed off being overly bullish to being mildly bullish. So as you can see, 7 bulls, 7 sideways, 6 bears. We backed off to, kind of a +1 in our overall leaning. So if we do get a bullish candle with a breakout in the S&P, then we are going to need to add in some bulls. We're going to need to add in some bulls, maybe take down a bear or two to give us more delta to the upside. Let's take a look first at FedEx. This is a trade we introduced on Monday. You can see here we are getting a nice breakout. I love to buy stocks at the bottom of high bases. It's one of my favorite trades to do. And then do a diagonal on it at the top of the base to where if it breaks out and runs, you can have an adjustment. If not, it goes up there. You've got a nice trade. This thing looks like it wants to break out, but again, this candle is not over yet. Based on where this candle closes today is going to be, yes, it broke out, or no, it failed to break out, and we're just back in our range. But ultimately, this trade looks really nice to the upside. Another trade on the bull side looks good. SL Green, this is in the real estate sector. This sector's been a nice sector. This thing wants to pop. It wants to pop. It's just being held back a little bit. Is today the day that it pops? If not, is tomorrow the day that it pops? If not, is it Friday? Look, this thing wants to pop. It wants to go. It's just resting. I think this thing's got some nice upside to it. SLG, SL Green Realty. All right, this is a trade I've got on that expires on Friday. Now, I've got a 1250, 14, 1550 butterfly. Now, I really wanted this stock to stay in this range. That was my trade. Hey, you stay in this range, and I'll make some good money. You go out of the range, 1550 is the top. I have no more risk after that. 1250 is my bottom. I got no risk after that. As you can see, we had a pop. We had a pop out of the range. Friday is expiration day, but this stock has earnings tomorrow. So earnings tomorrow is definitely going to dictate what happens with this one. Look, good earnings, this trade is a bust. This trade is a bust. It's a max loss. We're going to take our lumps, and we'll just move on to the next one. We position sized it small for max loss. We don't need to react at all. However, bad earnings, sinks right back down into this area. It's going to be a really great trade. And right now, there's a lot of premium still in there because earnings are there on the deck. Once those earnings are gone, we're going to get the volatility crush. We can just get a downward move into the 1480 or lower area. This trade is going to be a profitable trade. So right now, look, these are the trades where you can flip a coin. There's nothing you can do to be smart. There's nothing you can do for analysis. Anytime you go into an earnings report, just realize you're better off flipping a coin. There is one edge you can put on your side, and that is to trade with the trend. We did studies. If you want to look at those studies, we've got a video called Trend Following. So go into the Maverick website and go to the search bar, put in Trend Following. I actually just put that video up on YouTube as well. If you want to go take a look at it at YouTube, you could take a look at it there. It goes through all the studies that we've done internally, and holding a stock with the trend going into earnings, long or short, has an edge. It has an edge, and we break down all the numbers in that video. There is an edge to just simply being long or short. So look, this one is more bullish than bearish, so the odds are against us here. The odds are against us for a bad news on earnings, but look, it was like 59-41 were the odds. So this one's still got a decent chance to come back in for us. And then a short, a really nice short. I know Darren put this one out. This is a great trade from Darren. TC Energy totally broke down this week. So great trade this week. Entered on Monday. So this thing is looking fantastic. And this is in the energy sector when oil is up 2% this week. So very nice trades. All right, well, let's get into your trades. And I've already got a big list, so let's go through them now. Again, those of you that are here live, please just go ahead, keep typing in trades. I love to go through trades and give my output on them. All right, here we have ConocoPhillips. ConocoPhillips. All right, now I've got to admit that these kind of trades in my early years, probably my first 5 years, were the hardest trades to make because, I'm looking at this saying, I missed it. And guess what? You did miss it. And it's true. You missed it. You missed it 4 days ago, 3 days ago, 2 days ago. You missed it. But does that mean you can't enter it? And I almost it was impossible for me to enter a trade like this because I did not want to be the idiot that buys at the top. My pride was bigger than my desire to make a profit. And I got to tell a quick story. Joe's out of town this week. Joe and I have been trading together since 2000. Joe and I have traded together for 23 years. And Joe does so many things better than I do and vice versa. And it's really interesting to watch the difference between us over the 23 years. But early on, I remember arguing about a trade. And I told Joe, I know I'm right. And he looked at me like I was dumb. And he says, I don't care if I'm right. I just want to make money. When he said that to me, he might as well have just slapped me because he was right. I had so much of my ego tied into being right and being smart that I could never buy a stock like this because if this stock failed, I would have a massive crush to my ego because I bought it after it had already run. What an idiot. It was at 106 2 weeks ago. Now it's at 116 and you bought it? You're an idiot. My ego couldn't handle that. Joe, he had no ego. He's like, look, it's still going up. Look at this candle today. This candle today and the candle yesterday. Gap down, run up. Gap down, run up. There are buyers out there. There are tons of buyers. And yes, it is going to stop at one point. I get it. It will stop at some point. But right now, if you're looking to make a trade, this is one of the best ones out there. Now look, you can wait for a pullback. There's nothing wrong with waiting for a pullback. But if you wait for pullbacks, you know that a lot of times these kind of stocks don't pull back. So how do you safely get into a stock like this that is quote unquote overextended, but still be able to get in it? And this is where I learned the diagonal call spread. I absolutely love the diagonal call spread. So on this one here, Conoco is going to have dollar strikes. I would get into the 112 of August and sell Friday's 117. Get in it. Get in it. So again, a diagonal call spread, meaning that if it goes sideways, you'll still be profitable. Even if it backs off a little bit, you'll be profitable or break even. It's going to have to break down below 114 to put some pressure on you. And then again, We teach you how to have stops. We teach you how to manage these things. We teach you can delta hedge. There's a lot of things you can do. But sometimes it's more important to get in than wait for a perfect entry point. And I know that's hard to hear because it kind of goes against a lot of the technical books out there. But look, would I buy long calls on this? No. It's already too far gone. That's a dumb trade. Would I enter a targeted butterfly? Would I enter a diagonal call spread? Would I enter a mild vertical spread? Yes, absolutely. I like this trade. Great trade. Again, this one's got a ton of momentum right now. And if you play it right, I think it's a very, very good trade. So I like it quite a bit. Thanks, James. All right, Cameron, Boeing. I was just chatting with a trader that was long Boeing. This is one you've got to zoom out to really get the story on Boeing. You look at this and you say, oh my gosh, yep, I missed it. Here it was, 214, 228 today. I'm a dummy, I missed it. Zoom out. Did you miss it? Did you miss this massive, 7-month high base that Boeing's been putting in? And we're finally getting the breakout 7 months later, and you think you missed it. You think you missed it because it's gone up a couple bucks. This is a massive breakout on Boeing. I love everything about this chart. I like everything about it. So earnings report came out on today. Look, these are the charts that you dream of. Now, I'm not saying it's a guarantee. I'm not saying these don't fail sometimes. They do. But come on. When you write a textbook on trading and you say, what is it I want to see? A 7-month breakout on an earnings report. Yeah, I love everything about this. The only question is, how bullish do you want to trade it? If you want to be a wimp, you do like a 225, 230 diagonal call spread. By the August 225, sell this Friday's 230. There's probably maybe like 75 cents left in this, maybe a little bit less. But look, you're going to bring in that premium to where if it does fade a little bit today, let's say it fades a little bit today, you're going to have that short call for insulation. And then you can look at it on Friday and say, okay, does this thing still look as good as it did today? Then you can make your decision. So I love diagonals because it's the wimpiest way to get into a trade that gives you the ability to make it more bullish in a very short amount of time if you sell this Friday's option. And this Friday, hey, if this thing holds this gain and is trading at like 230 on Friday, just either buy that short call back or let it expire and hold long calls into August. That would be phenomenal if you could get that. Now, if you do that kind of trade, diagonal trade, one of the things that does suck is sometimes this stock will rip up to 240. And you've got your little 225, 230 diagonal call spread where you've made, a little bit of money, not a lot, a little bit, and you have to walk away from the trade that really boomed. So it's a give and take. You got to decide how you want to actually trade it. But I love this one, Cameron. Fantastic trade. All right. Also, Cameron had Starbucks. All right. I'm going to definitely not be as excited as far as Starbucks goes. I like this one on a neutral for sure. But this has completely ignored the bull market. This stock has its own problems. Now, look, I can draw some positives as far as, okay, we did break out above this resistance. It looks like we're holding it today. I could be a +1 on Starbucks, but that's it. And so +1s means I can do really wimpy bullish trades. Like I could do a 100, 102 diagonal call spread. Very, very wimpy. I could do a 101, 103 vertical spread. I could maybe do a 102, 104, but that's crazy. That's absolutely crazy. There's no way I would touch this with any sort of long calls or really high delta things. So look, I think you can give this a +1. And if you want to play this, you can play this as a +1. But here's the question. Is there better trades out there that are +1s? And the answer is yes. There are so many better trades out there that are looking stronger than Starbucks that you can put a +1 style trade on. So I would recommend go hunt elsewhere. Thank you very much, Cameron. All right, into the financial sector. Lincoln Financial. This is from Justin. All right, Justin, awesome. And again, I'm going to go back to the one we just talked about from James, COP, the one that it looks like we've already missed it. These were the hardest ones for me to get in as a younger trader because I didn't want to be the idiot. I mean, how dumb would I feel if I bought a stock that was at 22, that's now at 28, that's had a 28% run, and I bought it like an idiot after a 28% run, and it fell down? My ego couldn't handle that. So I couldn't make these trades simply because of my ego. But we're a little bit older and wiser, and we now know that these trades are just fine as long as you use the correct strategy. So again, we're just getting bases and breakouts. Bases and breakouts. That's all we're getting. So look, we just broke out of a base. Sometimes these are hard to recognize, but take a look at this. We had about 2 weeks there of a base. We're breaking out. So I love everything about this. I think this thing looks great. Question is, how do you play it? This is not a fast-moving stock. And yes, I think about 30 is about the best you can hope for. But I think you've got to be all the way out to the August monthly expiration, which is going to be, let me get this moved over. Oh, by the way, I'm using TradingView. Really like TradingView for this kind of features. So I'm looking at, right here is expiration on August. Do I think it'll get to 30 by then? Yeah. I know. These are all little things you can do with the chart to kind of talk yourself into, oh yeah, look at the current trajectory of it, the current slope. Look, I draw these lines, and these lines they look cool, and they're great little projections. But understand, this line that I just drew is total BS. The stock is not going to move along this line, and if it does, I got lucky. But the question is, with this current trajectory, do I think that it's possible that it gets to 30 by Friday, August 18th expiration? Absolutely. Yeah, that's a very reasonable target. So I do like everything about this trade. So that is Lincoln Financial in the financials. Justin also has UNH. All right, so here we have UNH, and the short-term chart looks great. It looks great. We are going to be running into some overhead resistance here in the 425 area. Let's just call it 425. So I think you've got, 10 points before you run into some resistance. I think as long as you understand that, know that, and put a trade together that, handles that, then I think you have the right thing. You mentioned you were looking at the 525.30, which I actually do not like, because you're asking it basically to break out of this point. It's spent a lot of energy over the last couple of weeks. This thing does, at some point, it's going to run out of gas. And I would rather see your trade be like a 515, 525, or even a 515, 520. I know that's a little bit less aggressive, but I think that's a better trade where, this thing it has spent a lot of energy. And yes, it's got a lot of momentum. We got overhead resistance. I think to be a little bit less aggressive on the target, I think it makes sense. So I like the 515, 520 as a better trade. That's just, again, my opinion. But again, I want to go back to the trade we just looked at, Lincoln. It has no resistance. It virtually has no resistance. Well, I guess it has resistance at 30. The next place it's got resistance is that target of 30. I think this one makes more sense to be more aggressive. Say, hey, I think this thing can go more. But when you take a look at UNH, you say, hey, you know what? I think we're going to probably hit ahead at 525. Let me have my target a little bit below that one. So that's just my analysis there on UNH, Justin. All right, James with another one. Rivian. All right. Rivian. We've been talking about this one trade, the trade that has gone up a lot and looks like it's gone too far. And this one's crazy. If you take a look at percentages, we're talking about 13 to 27. This thing is doubled. This thing is absolutely doubled. And we're going to buy it after stock has already doubled. I could never, ever have done that my first couple years as a trader. Why? Because I couldn't sleep at night if the stock that just doubled, that I was dumb enough to buy, like all the sheep and all the lemmings and all the dumb people that don't know what they're doing, if I bought that same stock and it went down, I would be a sheep and a lemming too. And my ego can't handle that. So I wouldn't get into these. This trade looks awesome. And look, the question is this the breakout? I don't know. A lot of times these high bases, you need to have this 20-period moving average push it up. So I like this trade. You may not get the breakout this week. It may be next week, but I like the trade. However, we're in earnings season. Check earnings. I don't want to be in this thing during earnings. Or if I'm in it, I want to be in an earnings play because this thing will lose half its value or it will go up another 100%. Super volatile. Check earnings. If you're going to be in the trade during earnings, it better be an earnings trade, not a regular trade. But the chart looks fantastic. So great job.
Have you been trading in the markets for at least 2 years? Are you starting to see some decent progress? Is that progress so small because of your limited account size? Maverick Trading is a prop firm that provides capital to profitable traders. You trade a minimum $25,000 account and keep 70 to 80% of the profits. After 2 consecutive profitable months, you move to a $50,000 account. As you keep progressing, you will be able to trade 6- and 7-figure accounts. To learn more about trading for Maverick Trading, either click on the Apply card in the top left, click Apply at the end screen, or click the link in the description to watch our recruiting video that explains more about Maverick and prop trading. If you like what you see, apply for a position and meet with our recruiters. Are you our next trader?
All right. If I remember, Dwight is your name. Sorry, you just have D for the name, but I think it's Dwight. Sorry about that. All right. General Motors. I actually talked about this in my end of day post I did for Joe yesterday. And I said I really like these kind of trades. Trades that are in what I call the penalty box. And what I mean by penalty box is they had an earnings report. The earnings report weren't that good. And we got a drop off of that. So 40 down to 37 on GM, that's a big move. That's like a 10% move. A lot of times these things have to sit in the penalty box. So let's just take a look at some lines here. So before earnings, this stock was trading around 39. Let's see, it closed at 39.30. So it'd be safe to say, well, if earnings were bad, it shouldn't trade above the price over the next couple weeks that it was before earnings came out. But then we say, okay, we're in a bull market, and this bull market is probably going to hold up a lot of bad stocks, which is what bull markets do. So we could go back to a support point, say, you know what, 36. The news was bad, but it wasn't terrible. I mean, take a look at the candle we got on earnings. There was slightly more buyers than sellers, even though it had a big gap. There was an equilibrium of buyers and sellers, which is what we love to see. Bad news, equilibrium of buyers and sellers. It's unlikely to get above its price before earnings. The market is bullish. I love this one for a sideways. I love it for a sideways. So thank you, Dan. Sorry. I love this for a sideways, and I think I talked about a 36.38.40. 36.38.40 was my butterfly on this one. for 2 weeks. Love this trade. I think it looks really good. All right, awesome. Do we have any more trades we want to take a look at? See, I'm like so incredibly bummed at the moment. I'm having so much fun. And this is the stuff I love doing with our traders. And it's stuff that I did for years and years and years and years and years. And then we just more and more videos. And look, I get it. I'm older. I'm 49 years old. I'm Gen X, but I'm, verging into boomers. I'll be a boomer at some point. But, I really miss this stuff. It's always fun. So. All right. So I shouldn't say this, but I'm going to say it anyway. We are working on an additional program that has specifically live stuff. So we're working on that. Probably won't be ready till August and November. But if you really do like the live stuff, we are working on some additional programs on that. But we'll have some information on that when we're closer to being ready. But for now, this is the last of the midweek trading rooms. I know Joe's been taking care of you guys forever. All right, so bulls, let's go ahead and write these on the table. We had UNH. UNH as a bull. We had COP as a bull. We had Boeing as one of the best charts I've seen this year. 7-month high base breakout on earnings. Love that one. We had Starbucks. Boy, I'll put Starbucks here. I gave it a +1. I didn't love it. I think there's better stuff out there. We've got General Motors here in the neutral. And we didn't really take a look at anything bearish. Oh, sorry, I forgot Lincoln Financial as a bull. Look, the bears have been tougher to find. There's no question about it. They've been tougher to find, but that's what bull markets are. They're tough to find, those bears, but we're going to keep making them just so when the markets do pull back, we don't really get slapped. We've got something working for us. And look, if we do relative strength and relative weakness well, we can make money on both trades, even in a +3 bull market. The place where this basket strategy really works well is when you have a 0 on the market overall, and yet you're long the +2 sectors and short the -2 sectors. Where it's really great is when all your trades are profitable and the market didn't go anywhere because you're in relative strength and weakness. When you get to +3 or -3, +3, pretty much all the shorts you take are going to lose. They just will. They just will. People always ask, well, then why take them? Because sometimes they save you. And remember, the name of the game is survival. We're looking to trade for the whole year. If we give up a couple % in one of the months for some safety for the whole year, big deal. Big deal. We're very happy with that. All right, Justin added Chewy. I'm not going to have a chance to take a look at it, but let's add it to the board. Chewy's a bear from Justin. Looks good. All right, let's sum up this week. Markets. I put bullish but tired. But we have the FOMC here in about hour 15 minutes now. That candle, I was very clear. I spent a lot of time on what I think is going to happen after today's candle. Big red candle. I think the Qs are showing the first sign of technical trouble they have in months. And I think you want to dramatically take down your long delta in that sector. The rest of the market, look, if we get a red candle, it's a pullback. I'm going to look to just get more bullish to pullback. I've already backed off a bit, so it's not really going to hurt. I would love to see a pullback on the S&P. I would love to see a red candle. It'd just get me excited. But a red candle in the Qs, it's going to be a warning. It's the first warning signal we've seen to watch out. As far as economic data for the rest of the week, we got second quarter GDP tomorrow morning and core PCE price index on Friday morning. All right, that's it for me. Thanks for joining me. Everyone take care. Bye.